Talk Uber because Uber's on its road, or on the road, it's on its road show to the IPO after Lyft's shaky first weeks of trading. What is the investor appetite for ride-hailing companies? Joining us right now is noted venture capitalist and Uber investor Bradley Tusk. He's CEO of Tusk Ventures. We've gotten some of the numbers now. We have a little bit of a better sense of what this company looks like. And I think the prevailing question that's still on the table is you can compare yourself to Amazon or whatever company you want. But what is the path to profitability?
The path to profitability is to two roads. One is more than just ride sharing. You wrote about this morning, or your team did. So Uber Eats, Uber Freight, lots of different products, logistics. Two is, as we're seeing the rate of people getting driver's licenses decline, ultimately that leads to people still have to get from point A to point B in some fashion. So I think what Uber has always believed and still does is there's still a much bigger market out there to tap into.
Okay. Let me ask it this way. Do you believe that today it is riskier or less risky to invest in Uber than it would have been to invest in Amazon at this same time or stage in its life cycle?
I would argue less risky for a few reasons. One is Uber's had the benefit of watching Amazon go through this process and kind of 20 years of all of Amazon.
But a lot of things had to break the right way for Amazon to get to the place it did today.
But it did all of those things, and I think Uber's got, at this point now, the sophistication, the capital of the brand, and clearly there's enough market demand between people need to get places and things need to get places that if they can capture that market, they're going to be really profitable.
But we were talking in the last hour about this idea that with Amazon, you knew that potentially if they were willing to raise their prices, not even so much, just marginally, there was a chance they could become profitable relatively quickly. I'm not so sure that's as true in the case of Uber, insofar as there is huge competition in this space, both from Lyft and taxi cabs in the main business that they're already in.
The one really key thing, and this matters both to Uber and Lyft, is they both went public effectively at the same time. And so the kinds of games that both companies have been playing for years and years, where they undercut each other and they don't have to worry about it because they don't report earnings or anything else, neither of them are really in a position to do that anymore. So it is totally possible that the price of an Uber or Lyft might go up, but the subsidization won't have to occur.
But the catch there is that historically, they might have been trying to price each other out of the market, but we're forgetting about the third player, which is taxis, the incumbent player, which is to say people took Ubers and took Lyfts, especially at the Uber X level, in part because they were at least the same price as taxi or cheaper, oftentimes cheaper originally. If that price goes up, I'm not so sure people aren't going to just stand outside with their hand out.
They might, but taxi prices keep going up as well. We're going to have this big congestion surcharge here in Manhattan. And the other thing is, in the 10 years since Uber's been out there kind of eating taxis' lunch, have you seen a material improvement in taxis across the U.S.? Do they provide better service? Do they provide better cars? I mean, have they really responded to the crisis at all? I don't see it.
And you think that people are willing to pay for that?
Yeah. I think they already have been for the last 10 years.
Yeah, but they have been at a rate that is losing Uber money for every ride they order. Are shareholders going to be able to continue to pay for that, willing to pay for that?
Yeah,
look, I think that's where some of the subsidization will end, and I think that's where Uber has to both have other markets like freight and Eats and things like that, and where they'll have to keep taking advantage of people just saying, I don't need a car anymore, I don't want to pay.
We are in an economy where half the population can't afford to miss a paycheck, and they don't have $400 in the bank. The people that are using Uber are in the upper half. They're not, and if prices go up from here, you're going to have fewer people, and it's not really
possibly, but people still have to get to work.
They're still on buses and
but I mean, again, look at the state of mass transit. Just we're sitting here in the middle of Times Square in New York City. It's totally unreliable. You can't count on it.
Because I know it goes up. I'm starting to see my Uber bills.
Well, you have the congestion surcharge here in New York too.
No, but just for kids, if they use it all the time, it's a luxury. It's not something, every time they need to go get a blowout for their hair. I'm talking.
And what if you said, okay, I'm going to get rid of my car, no payments, no insurance, no parking, no maintenance, no gas. You sure it's still more expensive?
Depends on where you live.
Right.
Out in the burbs. It doesn't compete with the car.
I was surprised to hear, I didn't realize, Leslie was telling me today that Uber said in its own prospectus that if they don't see a drop in competition, either in Uber Eats areas or in the ride-hailing service itself, that they might not ever become profitable. But that is a risk.
I saw that. I couldn't tell how much that is the lawyers saying you need to put these things in and how much they actually believe that.
What do you think?
I think it's a little bit of the lawyers. I have a hard time imagining that. I mean, if you forget about the people like me who were in Uber really, really early and will do well regardless. People have been coming to the company to work there over the last couple of years. You know, they don't have that huge bump in valuation. So if they don't think that there's some path to profitability, there's no real reason to go there.
How dependent, in terms of path to profitability, do you think they are or will be on this idea of autonomous driving in the future, that you take the driver out of the system? Because that, to me, if true, is interesting, yet I think, you know, depending on who you talk to, Elon Musk will give you a year, other people will give you a decade.
Well, yeah, Elon will also, he'll have autonomous cars on Mars by like 2025, right? So, yeah, I mean, I think one is we're not that close on this yet. Level 5 autonomy, which is considered the true self-driving concept, is nowhere here yet. And even if we were, there's no regulatory framework at all to actually have it. So the idea that Tesla's going to have robo-taxis on the streets next year is insane. But ultimately, could autonomous vehicles bring down the Uber's costs and increase its margin? Sure.
And final question, bringing down the valuation last week.
Yep.
You look at that as just Uber trying to be conservative in the way that Pinterest was, and then you saw it rocket up in the market? Or do you think that there's a real concern here, given the way Lyft has performed?
I think that Lyft is a cautionary tale now. And I think let's say Lyft were up 22% instead of down 22%, I wouldn't be surprised if Uber's valuation was more like 100 to 110 billion instead of, I think, 84 is where they're settling right now.
And final question. Yeah. Will you be selling on the IPO?
I have a lockup.
You have a lockup?
Yep,
Will you sell at the end of the lockup?
I will sell when it's smart to do so. But yeah, having this much of my position in one company is not smart.